Morning, guys. It's Monday, July 21st, 5:23 a.m. Central Time. Grain markets are mixed to lower this morning. December corn futures down 3 at 424 and 3/4. November soybeans down 8 cents at 1027 and 3/4. December Chicago wheat up 1 at 568. December Kansas City wheat up a quarter cent at 551 and 3/4. December spring wheat is down a half at 616. We've got some heat coming into the Corn Belt this week. Why don't we start there?
So, starting tomorrow, a heat dome will deliver high temperatures and humidity to the majority of the Corn Belt. Daytime highs are expected in the 90s, with some areas potentially reaching between 95 and 105 degrees Fahrenheit. Combined with elevated humidity, heat indices are forecast to surpass the triple digit mark. Overnight lows in the mid to upper 70s will offer little relief, further adding to stress on crops. The extended forecast suggests some moderation in temperatures by the weekend.
All right. So this is the Dome of Doom. Just about every year, I have a video that includes the words Dome of Doom because this sort of thing happens, this high pressure ridge. This map is the Euro model version of 500 hectopascal geopotential height. Do you know what that means, Mackenzie?
Absolutely not.
Neither do I. But this is supposed to be friendly. This is supposed to be bullish the market. Whenever you see the Dome of Doom emerge, it's supposed to be friendly the market because the Dome of Doom, the high pressure ridge, what it does effectively is it locks in high temperatures or heat and it locks out precipitation. Now, in this particular instance, the dome over the Midwest, over key corn and soybean growing areas, it's only going to last for a few days. Therefore, the market appears disinterested. I had thought yesterday, I looked at the forecast in the afternoon and then again in the evening, and I thought, something, this Dome of Doom paired with some of the historically excessive rainfall that we've seen in parts of Iowa and parts of Illinois, maybe this is going to start to get the market's attention. And maybe the market's going to think, you know what, this growing season isn't perfect. That's not what's happening at all. The market is much more focused on rain. Here we'll go back to the temps in a second, but we had some rain over the weekend in Iowa again, in Illinois again, some places in the Eastern Corn Belt. This is what I was talking about in terms of historical rainfall or historically extreme rainfall. This is an updated version of that Iowa State MesoNet map, and these are precipitation rankings out of the last 133 years. So that pocket in Northwest Illinois where it says 2, that means out of the last 133 years, month to date, July has been the second wettest of the last 133 years. I just don't know that historically extreme anything, whether it's temperature, rainfall, is necessarily good for crop prospects. But that seems to be the opinion of the marketplace. The marketplace seems to be of the opinion that rain makes grain, and it's that simple. And maybe it is that simple. Maybe I am getting too deep into the weeds here with my talk about excessive rainfall and some of this heat. I just don't know that it adds up to perfect conditions or perfect growing season. You guys let me know what you think. I know there's a lot of variability. Rainfall, because this dome is going to be kind of short-lived-ish, is still expected to be near normal here over the next 7 days. And then again, near normal during the 8 to 14 day period. Thank you to our friends at Crop Profit for providing these maps. So the market, is clearly not interested. We opened lower last night. I thought there was a chance maybe we open higher and this turns into something, but it very clearly did not. So again, rain makes grain, much more important apparently than the Dome of Doom, which is not so doom worthy, I guess, this time around.
The funds trimmed their net short position in the corn market last week. For the week ending Tuesday, July 15th, large money managers were net buyers of 20,000 corn contracts. The funds also sold a net 24,000 soybean contracts, resulting in their first net short position in the soybean market since early April, totaling 17,000 contracts. Additionally, the funds were net sellers of 5,000 contracts of SRW wheat on the week.
There was probably some additional short covering after the CFTC reporting period, which is through Tuesday last week. The private group's estimating that the funds may be short like 140,000 contracts of corn in real time. But in any case, there's nothing here. Okay, so they flipped short soybeans, and it's not a big net short. You've still got what I would call an opinionated net short in the corn market. It's not totally agnostic, and the funds have just been perpetually short the SRW wheat market. So I'm not reading a whole lot into it. It's still very unexciting in terms of the CFTC stuff.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
5 Minute Friday has apparently become a fan favorite. So in 5 minutes, every other Friday, I do a quick kind of thought-provoking or maybe ROI invoking video. We talked about corn and inflation, and actually I viewed this or took this through kind of a different lens than maybe some others have. I talked about bottom of the barrel corn prices like call it pre-COVID, post-ethanol versus post-COVID. What's the new bottom of the barrel? I think we may have kind of figured it out last year, but I told you the exact reasoning and some statistical analysis on why I think that. Josh Linville, fertilizer celebrity from StoneX, joined me on Thursday last week, and we did a quick update on the corn fertilizer ratio and why this is at historical extremes, the reasoning behind it, where the risk is. Josh is going to, I think, become more of a regular with us, maybe try to have him on once a month. He's very, very good, and I don't know a damn thing about fertilizer. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. My friend Chris Barron's going to be on today. We're going to talk about early 2026 corn and soybean budgets, which is not necessarily going to be a fun conversation, I don't think, but we need to be aware of what's going on. Go to standardgrain.com, sign up this morning, $50 per month. You can cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. Remember, we just do YouTube here for we lose it. It's free, but we actually lose a ton of money doing YouTube and the podcast. So the premium subs float the boat for us. If you're not a premium sub, give that deal a shot. If you are a premium sub, we love you to death. We love all of you to death anyways, but if you're not a premium sub, you should give it a shot.
Bangladesh signed a deal last week to boost its U.S. wheat imports. Under the agreement, the nation will purchase 700,000 metric tons of U.S. wheat annually over the next 5 years. The move is seen as an effort to strengthen trade ties and secure tariff relief ahead of the 35% U.S. tariff on Bangladesh imports that is set to take effect on August 1st. Bangladesh currently runs a $6 billion trade deficit with the U.S. While the deal expands the global market for U.S. wheat, it represents only a small share of the nation's 7 million metric tons in annual imports, most of which come from the Black Sea region due to its lower prices.
Bangladesh is not a huge wheat importer. They do make the top 10, but as I mentioned last week, I think wheat imports, in terms of the net, who are the largest importers, it's split up a lot. There's a ton of countries that import wheat. Bangladesh would be, I believe, the 8th largest is the projection this year, but that's only 3.2% of all projected imports. I like the trend. I like the trend of these trade deals. We're starting to see purchase agreements. So we saw the deal with Indonesia reported last week, and they also agreed to buy some U.S. ag products. It's not the China agreement that we need to see, but I like that we're at least seeing the agreements. The agreements so far have not been enough to move the needle, but perhaps we get to that point.
Chinese soybean imports soared to a record high in June. Imports from Brazil increased 9.2% year over year, accounting for nearly 87% of the total imports for the month. U.S. imports increased 21% versus last year, representing roughly 13%. The sharp increase in June arrivals largely stems from a backlog created by delayed customs clearance in April. From January through June, Chinese imports of Brazilian soybeans declined 7.5% compared to the same period last year, while imports from the U.S. rose 33%. Chinese soybean imports are expected to remain elevated through the third quarter. However, fourth quarter imports will depend heavily on the outcome of ongoing U.S.-China trade negotiations.
USDA is projecting record Chinese soybean imports during the new crop marketing year, or at least we're going to tie the record from last year. So it's expected to be good, although we've seen estimates out of China that are much less than that. So USDA has got a 112 million metric ton number penciled in for new crop. I think the most recent estimate I saw from the Chinese government was like 98. So I don't know exactly what's going to happen. But we're going to start to focus a little bit more on the new crop situation, Chinese demand. What are Brazilian crop prospects? I know we've still got a U.S. growing season we've got to get through, but the topic of conversation will change just a little bit. When it comes to feed grain imports, corn and wheat imports backed off a lot this year. 24-25 is the current marketing year, and you can see they're at, 5 million and 3 million respectively. USDA is projecting a bounce in corn and wheat imports next year, although I don't know that that's a guarantee by any means.
President Trump signed the first ever federal law regulating stablecoins last week. The Genius Act establishes a clear regulatory framework for U.S. dollar-backed stablecoins. The law aims to legitimize the stablecoin market, reduce systemic risk, and boost global confidence in dollar-based digital assets. Trump labeled the legislation as a giant step toward U.S. dominance in crypto and finance. He also stated that the law would help secure the dollar's role as the world's reserve currency. However, critics argue the law doesn't do enough to protect consumers and could lead to government bailouts if stablecoins fail.
Do you know who those cool finance bros are in that picture, Mackenzie?
No, but you do.
Those are the Winklevoss twins. They're the twins that Mark Zuckerberg supposedly stole Facebook from. They're in the movie, If you watch the movie,
Oh.
those are the twins that he like stole Facebook.
Oh.
Supposedly, they say that he stole the idea from them.
Mhm.
And then what happened was they settled, I believe, out of court. Maybe it was in court, maybe it was out of court. I don't know. But they got like a couple $100 million from Zuckerberg. And what they did was they took all of it and invested it into Bitcoin and a Bitcoin exchange. They own an exchange called Gemini, which is actually my preferred Bitcoin exchange or crypto exchange. And they've made like billions of dollars in crypto. So they actually ended up looking pretty good despite all that Facebook thievery, supposed thievery. In any case, stable coins are basically like it's crypto, but it's pegged to the dollar. So you don't make money in stable coins. Stable coins are used like they're kind of like an on ramp or off ramp for Bitcoin so that you don't have to transfer things back into dollars and then back into crypto. Also, I guess they're starting to use them in foreign countries because they can't get their hands on real dollars. I don't know why the focus on stable coins, but that's the story anyways. What did cattle do on Friday?
Cattle futures were lower. Live cattle were 12 cents to $1 lower. Feeders saw losses ranging from $1 to $1.55. Cash cattle trade was mostly steady last week. In the Texas Panhandle, fat cattle were steady to $2 higher compared to the prior week at 230. In Kansas, cattle were steady to $1 higher at 230 to 231. Up here in Nebraska, cattle were steady to $1 lower at 240. And then over in the Western Corn Belt, cattle also sold at 240, which was steady with the previous week.
Outside markets fairly quiet this morning. The Dow's up 100 points. The S&P's up 16, floating around all-time highs. Treasuries are up. U.S. dollars off just a little bit. Crude oil is down 23 cents in the September WTI at 65.82. Have a great week, guys. We'll be back on Tuesday.